Does the GST law actually contain valuation provisions for corporate guarantees?
Suresh, it's a very important and very critical question because this valuation aspect and the provisions are going to decide the fate of the case. There is a dispute still between the department and the taxpayer, and in general also, it's a matter of fact and law both ways, that when the GST was enacted, there was a regime brought by the Parliament, which has one chapter which is called Chapter 4 of the GST rules, which has various valuation provisions. And there is a section which is called Section 15, which has to be read along with the charging provisions, which is Section 9 and 7, which defines the supply, etc. So when we look at these provisions, you will find out that there is no clarity so far as the valuation part is concerned. Now, once the valuation part is absent, then one can look into the simpliciter value of transaction. And the value of transaction may be dependent on the invoices raised or charges demanded from the service recipient, etc. Now, it is a very critical aspect. Why I am saying so? Because when there is a group company, there is generally no invoices raised by the parent or subsidiary to one another. And because it is for the benefit of the entire group. When the subsidiary is benefiting from the financial facility given by the principal lender, and then the principal company or parent company is also benefiting. So generally they don't do it, the invoicing part. Yes, there could be a situation where they have recorded in their annual financial statement, the financial guarantee income. So that could be one of the aspects one can look at. But the financial guarantee income is mostly for the company's law perspective, which is notional in value, and it doesn't have any correlation, direct, indirect, with the actual value of the transaction. Now that becomes mostly a bone of contention between the department and the taxpayer. So that is one aspect. So 15 section which is there, it doesn't give any guidance so far as the valuation part is concerned. And general valuation provisions also not applicable. Now then we have to look at the rules what has been framed by the department. The rules also, which start from Rule 27 to Rule 35, which is part of the Chapter 4 of the CGST rules. Even those provisions do not give any guidance because it takes you into the circular reasoning. So assuming that Rule 27, Rule 28, Rule 27 applies to the parties which are not the related parties, where it is a group company, corporate guarantee is a related party. Then we go to Rule 28. Rule 28 also doesn't give you any guidance because it takes you to either to the identical transaction or to the similar transaction. In identical transaction and similar transaction, there is no further guidance. And importantly, what is a very critical aspect, that there was a GST Council meeting, a 52nd GST Council meeting. It was October 2023. In GST Council meeting, the minutes contain certain paragraphs which are very important, critical, which actually decide the case in favor of the taxpayer. I tell you how. That it says so far as the Rule 28, 27, 29, 30 and 31, so on and so forth are concerned, it has to have some kind of a contemporaneous data. Contemporaneous data could be in two forms. One is that if there is identical transaction which has taken place in the market, you can have a reference point for that. Number two, there could be a similar transaction. That could be a reference point. Now, so far as the identical transaction is concerned, because these are the transactions which are not in the public domain, therefore the data is not available. That is what admitted by the GST Council. And therefore GST Council was compelled to state this in meetings and the minutes that no data is available. Therefore, I am compelled to look at the artificial provisions, and therefore that the provisions of artificial nature were brought in the form of subclause 2 of Rule 28. Now comes to the similar transaction. When we look at the similar transaction, which is mostly like a bank guarantees. Now bank guarantees cannot be a reference point for laying down the rules for the valuation. Why? Because bank guarantees, one is that it is you have to put the complete collateral, maybe in the form of fixed deposit or the cash deposit or some other thing, because that's how it is given. And the margin money is very high. It can stretch up to the up to 1.5 to 5.5 or 6 or so on and so forth, depending upon the relationship between the banker and the person who is giving the guarantee, who's a surety here. These are the so many variables are there, so many moving parts are there, that can also not be the reference point so far that is concerned. So in those circumstances, GST Council again concluded, so far as the similar transactions are concerned, those are not identical, that data is also not relatable. So therefore, even if somebody applies, which is Rule 30 and 31, which says that general principles of valuation will apply. When we look at the general principle of valuation, then we again look back to 15. When we look at 15, section 15 doesn't give you any guidance. So it goes from one starting point and come back to the same starting point. The end point is also a starting point. So we go to 27, we go to 28, we go to 29, then we go to 30 and 31. None of them will help. Now in those circumstances, what the department did is that they have brought an artificial mechanism to lay down the value. How they have laid down? They have said that there could be variation. Now therefore they would like to fix 1% as a value between which is the transaction price, which could be the transaction value, and 18% of the 1% would be the GST which is payable. I am saying all of that deholds that the principal contention that it's a actionable claim, and it is excluded from the supply of section 7(9) under the schedule, third schedule, and therefore it is completely outside. That's a separate debate. But so far as the debate of the transaction value is concerned, this is right now the point. And there are various other aspects of it which actually does not make it a fair and reasonable provision for the valuation purposes. So therefore I could say that at least prior to October 2023, valuation guidance was not available. And in case that is not available, then it's a very difficult situation for at least for the department and could go in favor of the taxpayer.